The core of the question is about scaling in to a losing trade. So Richard was asking about setting up a second order set to scale in if there's a drawdown during, while the trade is live, if there's a drawdown while the trade is live here. And then basically trying to get out of the trade, so we want to manipulate the profit targets so that we can try and get out of the trade with at least a little bit of a profit, So if we're going to scale in, we're not going to try and get double the profit. We want to modify the profit targets so that we get some profit and hopefully just save, the trade. Let's try and save the trade here. All right, so the first order set is hopefully going to be the winner. When getting into the trade, we want order set A, right, our first contract, to hopefully just be the winner and just be done with the trade here. Let's see here. So the entry order is going to be a market. All right, so it's an 8-tick profit target here. All right, so we're going for 8 ticks on the trade here. So let me slow this down a little bit here. So what I simply did is for the profit target, I used the 10-tick, from the quick list here. And then we'll just go in here and modify the offset here. We'll knock it down to 8 ticks, right? So so there we go. So there's an 8-tick profit target, and then the stop was, let's see, a 32-tick stop loss. All right. So again, I'm just going to use the 10-tick from the quick list here, and then we'll open this up, open up the initial placement, and then modify this down to 32 ticks. There. All right, so the hope is that, this trade is just a winner and we're done. But if there is a pullback in price, or a drawdown during this trade of 16 ticks, right? So that's half the stop loss distance. So you can see our stop loss is a 32-tick stop loss. So if the market pulls back so that the trade is, down 16 ticks, then we want that as our condition to add another contract. We want to average into the trade to hopefully try and save the trade here. So we're going to scale in with a market order again. And this profit target is also going to be 8 ticks. Let's see, let me just double check. No, I'm sorry. So order B is going to be a 16 tick. Okay. Yeah, order B will be 16 ticks. Let's go in here and modify that. There you go, 16 ticks. Okay. Yeah. So the theory is that, right, if order A is has been executed and the market pulls back 16 ticks, right, then we want order B to scale in, and we can see that order B is set at 16 ticks. So the theory is to get the profit target, as close as possible to the entry price for order A. Right, so hopefully we can save the trade by having the market at least go back to the entry price for order A, and then we can exit out of the trade, right, with a small profit there. That's the goal. And so this is going to demonstrate, kind of how to link all these things together here. And let's see. And also what we're going to do is we're going to pull the profit target for A down to break even, right? So basically order set A turns into a break even trade, although since we're scaling in, it's not truly a break even because our average entry price, right, is going to be 8 ticks lower. So actually order A bringing it down to bringing the profit target to the break-even point would actually create, about an 8-tick profit. And then also order B its profit target would be about an 8-tick profit as well, right? Since we're cost averaging into the trade. All right, so the stop losses. Richard wants the stop losses to match each other, but currently, Bloodhound doesn't have the ability to match other order prices yet. So that is something that we do have on our to-do list, to be able to have other order sets, have other orders match the price of other orders. So have orders match the price of other orders. So that is on our to-do list here. So for now, since we are using a market entry, getting these prices to match each other is just going to be an approximation based on where our market entry order gets filled. All right, so let's see, back to the stop loss here. So this stop loss is going to be a 16-tick stop loss, and that will put the stop loss for order B, it'll put it fairly close to the stop loss for A. So let's see here. Let's go to 10 tick, and we'll knock this down to 16 ticks, like so. Okay, so now we need to start implementing some trailing actions here. And trailing actions is just the generic term that we use for automating your orders, right? Automatically moving your orders around, right? So for example, we want order B to scale in if there's a 16 tick drawdown. So let's go into the entry order here and set that up here, right? So we want the entry order for B to be placed after a 16 tick drawdown. So there's kind of two ways we can do this. We can use the delay, or we can use the profit or loss. I like using the delay just simply because it's easier to set up. So we're going to create a delay here of ticks of movement, but not in a profitable, but in a loss. So we're looking for a 16 tick loss here, right? So, and Richard, something you might want to consider is, since we're using market orders, you might want to consider just looking for a 15 tick loss, because obviously when you're using market orders, you definitely get some slippage, right? So, but anyways, that's for you to kind of decide on, on exactly what works best for whatever market you're trading, right? Different instruments have different spreads. So, but for now, we'll leave it, we'll set it to 16 ticks and leave it precise there. So there we go. So we have a place after condition. So basically the entry order for B is now conditional, and it only gets placed after a 16 tick movement of the market in a loss direction, right? Now, the other thing we need is whenever you use the place after, you need to use the cancel after as well, because otherwise order B will be left in a pending state, eternally. So the cancel after would be, let's see, a good condition for that would be if the profit target for order A gets filled, then we want to cancel the pending order for order B, right? So let's set that up here. So the cancel after, right? So we can see the default menu here is we can just simply use, this is the delay menu here. So we can just simply use after X number of bars, cancel, or maybe X amount of, if the market moves in, so many ticks of profit, we could cancel it. But what we want to do if we want to tie the cancel to the profit target, then we want to switch over to advanced, and we don't want to use the delay. So I deleted the delay trigger, and we're going to go to add, and we want to use order status changed here. Yeah, it's kind of hard to read with the highlights, so let me just move the mouse down here. So you see right above the mouse it says order status changed. Right, so we want order status changed. We select that, and now we need to select the order. You know, which order are we looking to monitor? You know, and we're looking for order set A and the profit target. Right, so this is the profit target for order set A. We'll select that, and then the mode. So you can say all filled or any filled, right? So whatever you want here, or canceled. So you can also have a trigger based on, you know, an order getting canceled as well here. So you know, this is only set to one contract, so all filled or any filled isn't going to matter. But, you know, let's say you're trading 5 contracts here for order A, then you can say, well, if any of those contracts get filled, then let's cancel order B, right? Or if all of them get filled here. So we'll just leave it on all for now. All right, so there we go. So there's the kind of automation here, behavior, to determine whether order B scales in or not, right? Gets executed or not. All right, now let's go back to order A here. So remember the profit target. So if we do need to scale in, we want this profit target to get pulled back to break even, right? To kind of help get this trade filled and get out of the trade as soon as possible. So we want the profit target to move to break even if order B does actually get filled and gets scaled in, right? So we're going to go to the trailing actions in order to move the profit target's location, to change its price, right? So we need to set the mode to custom for our trailing actions. And we're going to add a trailing rule here. And let's modify the name here. So we're going to go to break even at. We're going to move this profit target to break even. You know, when the entry B gets filled here. So let me stretch this out a little bit. All right. So for the trigger. So again, our trigger, we want to use the order status changed again, right? And then so our order that we're looking at is B, the market entry, right? So if order B gets filled, well, that's our condition to move the profit target to break even, right? And so of course we could say any filled or all filled, whatever. You know, but of course it's a market entry, so they're all going to get filled. So, all right, there we go. That's our condition. And so the action is, you know, where do we want to move this profit target to? So we don't want to move it to the last price. We actually want to move it to, there's a couple things. We can move it to the average entry price, because remember, when order B, if it does execute, we're going to have an averaged entry price, right? So we could do that, but the way this is designed to work is we want to use the entry price for order A. So this entry price is the entry price for order A, right? Because we're modifying the profit target for order A. So, all right, so entry price, and that's it. We're done. So, and there is no repeat, right? We're only going to move this, we're only going to pull the profit target in one time. So there is no repeating this, you know. So basically, usually the only things that ever repeat are stop losses when you're moving a stop loss up and up and up and up with the trade, right, with the market. So, but if you're moving a profit target, usually that's a one-time action. So, oh well, yeah. And the other thing that might repeat as well is, let's say you're using a limit entry order, and you're having your entry order follow some kind of moving average. So you want your entry order to constantly be trailing up as the moving average trails up. So that would be a repeating trailing rule as well. So let's see here. All right, so that's it. That's done. So we've got the trailing actions done for the profit target. Let's see, the stop losses aren't going to move. And let's see, what is there one other thing? No, I don't think there is. I think that's it. I wonder, I'm going to check something here. We might be able to actually match these profit targets up together. I'm going to check something here real quick. Yeah. So I'm going to do a little test here. So while we can't get the stop losses to match, yeah, it looks like we should be able to get these profit targets to match each other precisely here. So what I'm going to do is, so if profit target, A needs to get pulled back a little bit, then what I'm going to do is I'm going to calculate that new price for the profit target. I'm going to use the average entry price, right? So remember, when order B gets executed, it's going to calculate an averaged entry price, which in theory should be about 16 or 8 ticks below order A's entry price, right? 8 ticks below. Because there's going to be a 16 tick difference between these two, approximately. So, right? Because they're market orders, right? So I'll take the entry price and then add 8 ticks to the average entry price, right? And then for the profit target, for order B, I'm going to do the same thing. I can go into the initial placement, and instead of using the OCO entry price, I can use the average entry price and knock this down here to 8 ticks, right? So average entry price and 8 ticks above that. And then also for the other profit target, for the trailing rule, I'm doing the same thing. I'm using the average entry price and then adding 8 ticks. So in theory, both of those profit targets should, their movement, their new price should calculate to be the same in theory. So we'll give that a test and see how that plays out here. The one case where we might have, the one case where they might be a tick difference, is if the average entry price calculates out to like a half a tick or something. There's no telling how the computer is going to round off, a half a tick or so. So there might be some situations where these profit targets might have a 1 tick difference there, but there. All right. So that should do it right there. So let's see. Richard is commenting that since since the profit target for A closes at the entry price and B scales in with a 16 tick higher with a 16 tick profit target, the entire trade should net a total of 16 ticks. Correct. Yeah. 16 ticks total. So it would be two contracts times 8 ticks for a total of 16 ticks. Yep. Okay, so Richard is asking, what does OCO mean? So OCO is a very critical and common term in trading, and it means one cancels other. So when you submit a profit target and a stop loss together, they should be linked using an OCO order modifier. That means one cancels other. So when one of these orders gets filled, that is the condition to cancel the other. So if your stop loss gets filled, right, then you definitely want your profit target to get canceled. But if your profit target gets filled, then you want that to cancel your stop loss. So now, right, and so that is a condition at the exchange. So the exchange actually tracks the OCO canceling condition. Right? So that's all it is. Yeah. So what Scott was probably referring to is like, yeah, probably referring to the two different entry prices here, right? So we have an average entry price, and of course, you only truly have an average entry price if you're scaling in contracts at different prices, right? Otherwise, the average, if you don't have any kind of averaged in or scaling in of contracts, then the average entry price is just going to be the entry price, right? Now the OCO, or basically, maybe we should probably rename this to order set entry price. But the OCO entry price is the entry price for this profit target's entry order, right? So the OCO entry price for this would be the entry price for order set B, right? In other words, the entry order for B is this. So over for order set A, if the stop loss or the profit target uses the OCO entry price, well, it's going to be the entry price for its entry order. All right. So just think of the OCO entry price as like the localized entry price for that order set, and then the average, is the average, calculated average across multiple order sets. However many order sets you have going, and you're scaling in at different prices, this average will keep recalculating that averaged entry price. Basically, this averaged entry price, will show you the entry price that NinjaTrader shows you. Ninja's chart trader, shows you. So if you scale into a position, right, Ninja's chart trader will show you that average entry price flag. So that's what this one is. So, all right. So let's give this a try. So let's see here. We got up. So let's take a short trade here. And let's see, this was an 8 tick. Oh, what happened there? That profit target was 8 ticks. Let's see, let me just double check. Oh, yeah, that was correct. Okay, sorry about that. So let's see. Let me try this again here. Let's move the market up. I just want to get this text out of the way here. All right, as soon as this bar closes, I'll place a long trade. There we go, long trade. Okay, so let's pull the market back, and we want to create a 16 tick drawdown, which will then scale in order set B. All right, almost there. A few more ticks to go. Then there we go, bingo. Okay, let me neutralize the trend here. And let's see here. Oh, yeah. You know, it's got a little better if we have things marked. So that was our original order set A's entry price. And let's see here. So B was set, about a tick away. Let's see here. What's the average? So that is, looks like our average is about, it's hard to tell if it's 02 or 03. It looks like we got a split average here of probably 2.5. So probably got rounded up to 3. And then our profit target is 11 cents. So that's an 8-tick offset when you round off the entry. Let's see here. But order profit target A did not pull back. All right, let's see what happened here. Let me close this out. And let me double check what happened here with the profit target for A, because it did pull back. Let's see, all filled. Let's see, global auto trailing off. Oh, I think that might have been the problem. I think my global auto trailing was set to off, so that would have prevented the profit target from trailing. Yeah. All right. Let's give this another shot here. Okay, let me move the market up. All right, let's go long. And then we pull the market down. And let's place this line here at our entry price. All right, yeah, just take a little note here. Let me neutralize the trend here. So if you look at this, if you look at the order monitor panel here, right, we can see that B, the entry order for B is in a pending state, right, waiting for a 16-tick drawdown if it even happens. Right? So then we can see for order A, everything looks good. So, all right, let me pull the market down here. Okay, almost there. And there we go. That happens so quickly. Let's neutralize the trend. Actually, I'll go up a little bit there. And let's see. Profit target A is still is not pulling in. Yeah. All right. Let's take a look. Wrong one. There we go. We want to look at profit target A. Let's see. So that's fine. Well, let's try using a different price here. So instead of using the average entry price, let's go back to the OCO entry, and I'm going to remove the offset. So so this is going back to the original design thought here, just moving the profit target back to the entry price, which will match as close as possible to where the profit target for B is at. All right, so with that, let's give that a shot. And let's close this out. Let's move the market up. All right, there. Let's scale in there, go long there. And let's pull the market back and create that scaling contract. All right, we're halfway there. There we go. And come on, move the slider up. There we go. And, all right, so let's take a look here. Okay, hey, this time it worked out perfectly. So the profit target for B, yeah, actually landed on the entry price for A. Yeah, so actually it looks like order B, got filled exactly at 16 ticks there. And so our profit targets actually landed on top of each other perfectly this time. So again, I just want to emphasize that is coincidence because we're using two market entry orders here. So there's so once you factor in some slippage, during live trading, there's definitely going to be a tick or two difference between these profit targets here. So, all right. So there, we got that working. So next, let's see. Next, we want to make sure that the next test is to make sure that entry order B gets canceled if order A turns out to be a profitable trade, right? So if our profit target for A gets filled and hit, then we definitely want the scale-in contract of B to get canceled, right? So we'll test that out here. So let's close everything out. All right, there. Let's just go long. So we can see over here on the order monitor panel, B is pending. And we want to make sure that when the profit target gets hit, that B goes from pending to cancel. And there we go, it's canceled. And then also, let me neutralize the trend here. We want to make sure that this info panel as well, and it says flat. So there's no pending orders over here on this info panel as well. So, excuse me. All right, so there we go. So we have a solution for this. And let's see here. Let me open up profit target A here so we can see that really the trailing actions for A is kind of the key to this, to this question here. And of course, again, there are for the entry order B, right? We are using the place after and the cancel options here as well. So, okay, so Richard's asking, so he doesn't understand how the OCO entry price for B equals the current profit target for the break even of order A. So it doesn't. It doesn't. So here, let's go to profit target B. Profit target B here. Yeah. So for profit target B, yeah, that's actually using the entry price, the average entry price here, with an 8-tick offset. So going back to, so profit target B can't be set to the exact entry price for A, right? That if you look on the available prices here, we don't have, there isn't the, how should I say this? The entry price for A, for order set A, is not available, right? So this OCO entry price, this is the entry price for B, right? So as I said earlier, being able to reference prices of other order sets, or actually even other orders, is something that we have on our to-do list, right? So, but currently, right now, the prices for other orders can't be referenced currently, right now. So, but in the future, we will BlackBird will have that ability, right? So the profit target for B, yeah, the best we can do is just use the entry price, the OCO entry price, which is the, we want the average entry price. Yeah, we want to use the average entry price plus 8 ticks. Or, if you wanted to, you could take the entry price and then add 16 ticks, and you're basically going to end up with the same price for the profit target, right? It's just two different ways to skin the cat, so to speak. So so you can do it either way here. But yeah, earlier I was hoping that the average entry price plus 8 ticks, and then using the average entry price for order A would match the profit targets up together because the calculations were the same. But as we discovered, the average entry price wasn't available yet to profit target A in time. So let's see. Yeah, one last thing. Just remember, if you got questions for these workshops, please email your questions in anytime during the week. You can always email your questions in anytime during the week. And just let us know that you want your question answered in the workshop. All right, so if you don't mention, the workshop, then Mike will just answer your question and close your ticket out. So, okay, guys, with that, have a great weekend, and we'll see you guys next week. All right, bye-bye.